after another good month on the stock market, then I've yet again done all of the work for you, and I've found 3 heavily discounted dividend stocks that potentially could be the perfect pickup for your portfolio here in April. But before we get to it, then I would love to hear from you, so please leave a comment below and tell me what stocks you're looking to buy at the moment. So moving straight to the first one on my list, and here we have one of Warren Buffett's all-time favorite investments. And honestly, then I never thought I would be mentioning this company in a video like this. And the company is Apple, ticker symbol AAPL. And this is a really high quality company that probably doesn't need much of an introduction. But just in case you don't know what Apple is, then it is the company that has made the iPhone, the MacBook, the iPad, the AirPods and so many other things. And Apple is also the second largest company in the world, with a market capitalization of $2.63 trillion. And the technology sector has been the best performing sector during 2024. And we have companies like Nvidia, that is almost up by 80% year to date, and companies like Microsoft, that is almost up by 12% year to date. And then we have Apple, that has heavily underperformed, and that is now down by 12% year to date. And during the last month alone, then Apple is down by 3.53%, and they are right now trading pretty close to their 52-week low. And they are currently sitting on an earnings per share of 6.5, and they are trading at a forward price to earnings ratio of 26. And even though those numbers might not be that low, then they are very low for a high quality company like Apple. Whenever you see Apple trading at these values, then investors usually tend to buy, because they have been looking to buy Apple for a long time. And when you're looking at their 10-year performance, well then you do understand why investors want Apple in their portfolio, because their share price appreciation is absolutely insane. But not only is Apple a great stock when it comes to share price appreciation, but they are also paying a dividend. But the reason why investors want Apple in their portfolio is not because of the dividend, but they are paying a dividend, and receiving dividends on top of your investments is always very nice. And they currently have a dividend yield sitting at 0.56, and yes, that is not the highest dividend yield, but as I said before, then getting some dividends out of your investments is always very nice. And the reason to buy Apple is not because of the dividends. And they have a payout ratio sitting at 15%, and the payout ratio is really low, and that is nice because it means that Apple can easily improve their dividends. And they have a 5-year growth rate in their dividends of 5.63%, and that is pretty decent. And they have been growing their dividends for the last 10 years in a row. Apple is not amazing when it comes to dividends, but dividends are not the reason why Warren Buffett and so many other investors loves Apple. That is because of the share price appreciation. And right now, you have the chance of buying Apple at a really good valuation. So moving straight to the second company on my list. And here we have another big and well-known company that I have been talking about before, and that is Starbucks, ticker symbol SBUX. And this is another company that you most likely know about. But just in case you don't, then they are known all over the world for their coffee. And they have more than 42,000 coffee shops around the world. And it feels like no matter where you go, then you basically see people walking around with Starbucks coffee cups. However, even though Starbucks is really popular, then their share price hasn't performed that good. And during the last month alone, then they are down by 3%. And year to date, then they are down by more than 6%. And they are currently sitting right at their 52-week low, with a forward EPS of 4 and a forward PE of 22.5. And for those of you who have been following Starbucks for a while, then you also know that their biggest markets is the US and China. And the growth in China has been really slow for the last couple of years, but they are now finally expecting a turnaround, and that could lead to more profits going forward. However, Starbucks is paying some really nice dividends, and they currently have a dividend yield sitting at 2.5%, which is really nice, and a payout ratio sitting at 60%, and a 5-year growth rate in their dividends of almost 10, and that is very nice. And they have been growing their dividends for the last 13 years in a row. Overall, then is Starbucks a really nice company, and I do really think that Starbucks is gonna perform really well going forward. So right now might not be the worst time to buy Starbucks. So moving on to the third company, and here we have another company that you most likely know about, and that is gonna be Nike, ticker symbol NKE, and they are looking pretty interesting at the moment. Just after they have released their quarterly earnings report, where they did beat on both the top and the bottom, but the report showed a quarter-over-quarter 5% drop in footwear sales and a 13% drop in apparel sales. so the report wasn't all good. And that has caused the share price to fall by more than 9% during the last month. And we can see that right about here is where they released their quarterly earnings report. And year to date, then they're now down by more than 16%. And just like Starbucks, then they're right now trading at their 52-week low. And they have a forward EPS of 3.7 and a forward price to earnings ratio of 25. So they are definitely trading at a really nice valuation at the moment. But let's take a look at their dividends. And they currently have a dividend yield sitting at 1.6%, and that is almost 55% above their 5-year average. So if you are buying Nike right now, then you're definitely getting a nicer cash flow than you normally would. And they also have a payout ratio sitting at 40%, and that is a very nice level. And they have a 5-year growth rate in their dividends of 11%, and that is really nice. And they have been growing their dividends every single year for the last 11 years in a row. Nike is a really interesting company that is right now trading at a really good valuation. So if you have been looking to buy Nike, then right now might not be the worst time to buy. And these were basically the top 3 heavily discounted dividend stocks to buy here in April. However, I do also have some other stocks that are worth mentioning in today's video. And the first company I want to mention is the Hershey company, ticker symbol HSY, who is now down by 22% over the last year. But they have performed pretty well during 2024, where they are up by almost 8%, but they are still trading at a pretty good valuation. And the second company that I really want to mention is Agree Realty, ticker symbol ADC, and they are down by almost 10% year to date. And there is definitely a bit of a discount to be found here. And they have a really nice dividend yield, sitting at 5.19%. So ADC is definitely looking very solid at the moment. And the last one that I want to mention is the monthly dividend king, Realty Income Corp, ticker symbol O. And they are now down by 8% year to date. And over the last year, then they're down by 16%. So there is definitely a bit of a discount to be found here as well. And these were basically all of my dividend stock picks for April. If you have any stocks that you're looking to buy at the moment, then please let me know in the comment section below. It is always very interesting to hear your thoughts as well. But thank you for watching the video. I hope you liked the video and see you in the next one.